Thank you for joining us for another edition of the Optimized Weekly Market Recap. I'm Matthew McGraw, and today we'll be reviewing the key highlights from last week and what we're focusing on moving forward. Last week, markets delivered impressive gains, with the Dow Jones leading the way up almost 4%, followed by the S&P at 3%, the Nasdaq at 2.5%, and the TSX gaining around 1%. This impressive rally highlights robust market strength driven by strong earnings, easing inflation pressures, and a resilient economic backdrop. We can now move into this week's standout company, standout sector, and of course, the standout asset class. Let's start with Goldman Sachs, which posted impressive fourth quarter results driven by strong equity revenues and robust investment banking fees. Focusing on shareholder value through buybacks and consistent execution, Goldman Sachs remains a key contributor to our portfolios and aligns with our strategic overweight allocation to financials. The financial sector led performance last week, supported mostly through strong earnings from major U.S. banks and solid loan growth. Its resilience in favorable macroeconomic backdrop highlights its strategic overweight allocation across all of our portfolios. Finally, U.S. equities remain by far our top asset class, supported by consistent earnings growth, economic resilience, and global investor confidence. Leadership in key sectors like technology and financials highlight their long-term growth potential and market dominance. Starting with our weekly insights, the S&P 500 surged nearly 3% last week, marking its best performance since the U.S. presidential election. Market sentiment improved due to easing inflation, strong bank earnings, and renewed optimism following talks between President-elect Trump and China's president. Next, we wanted to highlight December's core CPI numbers, which rose 0.2% below economists' expectations, marking a slowdown after months of steady inflation. This easing inflation data has renewed optimism for potential Fed rate cuts in 2025, with risk assets responding positively as major indexes post strong gains last week. Lastly, the US dollar softened as markets adjusted expectations ahead of President-elect Trump's inauguration. Weakening US dollar reduced anticipation of immediate tariff implementations, easing trade concerns and supporting a much more optimistic look for global economic growth. On Thursday, analysts will be watching the US initial jobless claims report, which will reveal labor market strength, with recent claims expected to rise to 217,000, but remaining below late 2024 averages. Following this, they'll be looking at the U.S. existing home sales report on Friday, which will provide updates on housing market momentum after the November reports, which showed an 8-month high of over 4 million in annualized sales. Notable earnings this week include Procter & Gamble, Netflix, and American Express, offering updates on corporate performance and sector dynamics. Overall, it was a phenomenal week in the markets, with strong earnings, easing inflation, and resilient economic fundamentals, all driving significant gains across major indices. As we look ahead, key economic data and corporate earnings will provide valuable insights into market momentum and growth opportunities. As always, thanks for tuning in to this week's recap, and we hope to see you next time.